All right, so welcome to the day 18 of this YouTube mentorship. We have been on for the past 17 days, right? So this is day 18, right? So if you're just joining us, do want to go through the previous teachings. They're all inside one playlist, right? Just go to the October 2023 playlist, and then you can have access to all the videos right from day 1 up until day 17, right? So this is day 18, and I wish you guys the best as you join. All right, so let's go. Now, yesterday we talked about time and a concept of time and price, which is the power of three, right? So talked about what to expect when the market is bullish and what to expect when the market is bearish. Talk about the power of the daily candle. The market is going up when the candle is. Talk about when the market is bearish. We see the market is bearish. We tend to see when the markets go up first. Right? See, we tend to see a first bullish movement, which is called the manipulation, before the market drop down. If you have not watched the previous teaching, do want to watch it. It is the power of three, right? So talk about the daily candles and all of that, right? So I want to add something to that. Now, I talk about the daily candle, which is used for intraday trading, right? But if you're a swing trader, you can use the weekly candle. So for a swing trader, it's still the same concept, right? If you're a swing trader, you can use a weekly candle for the same thing, right? That means if you're trying to swing from the weekly time frame, right, you simply do the same thing. You bring out a weekly candle and then expect the weekly candle to go down first. The market wants to be bullish, expect the weekly candle to run higher first. If it's bearish, it will run higher first before dropping down. And if it is bullish, it will run down first before running higher. So that's the same power of three. It can be applied to the daily and to the weekly candle, right? So weekly is for swing trading, while daily is for intraday trading, right? So if you're using the daily chart, then you go to a lower time frame to mark the time periods and all of that, right? If you're using the weekly chart, you can use the daily chart or the 4-hour chart to mark those points of interest, right? So just always mark the time the weekly candle opened, then you expect market to run down and the full response, right? So I'm not a swing trader, so I don't really know how the swing traders do that, right? So as we continue, I will talk about swing trading as we continue, right? But for today, we're talking about the London Killzone, right? So I want to teach you guys sessions now, right? So I'm talking about all those fun stuff. We're talking about a very important topic, which I feel is one of the biggest secrets to my success in trading, right? And that is just understanding what time periods, right? So we have to understand the time periods, when to trade certain pairs, when not to trade certain pairs, and it's very, very painful. Sometimes I see some guys trading the indices. When I mean indices, I'm talking about the US 30, the Nasdaq during the Asian session. I don't even know what they expected or the comment during London. So let's talk about London Killzone and session. So we're going to combine them, talk about the Killzone and the session, right? London Killzone and session, X session, right? So, sorry, let's do it this way. We want to combine two of them, London Killzone and section. All right, so do this. So I can talk about the Killzone and the London session. Now, the London Killzone refers to a window of opportunity in which the market presents a specific setup and a specific kind of volatility. So you have to understand that the market is time responsive. When it comes to the forex market, this is why I love forex. I prefer forex to synthetic indices because for forex it has specific time periods, so you don't have to always be on your chart, right? So when it's a time period, you can simply come and look at your chart at that specific window of opportunity. So that's why I love forex. You don't have to be looking at the chart by 1 a.m. in the midnight. You're looking by 5 p.m. You're looking every single time. You just have a specific window. You just come and you look at your chart. You look at certain pairs and then you look for opportunities, right? So for the London Killzone, it's a window of opportunity in which we expect volatility and some setups on certain pairs. So what are the pairs that you look at for during the London Killzone? What are those pairs you look at for during the London session, right? They're simple. The pairs that have was GBP, Euro, these are the pairs you look at for, and the CHF. So those are the pairs that you look at for during the London Killzone. So these are the London pairs, right? Look at the GBP, the Euro, and the CHF. So it could be GBP USD, it could be GBP JPY, it could be Euro GBP, it could be USD CHF, it could be Chef JPY, it could be Chef CAD, all those pairs that have Euro, GBP, and Chef attached to them. Those are the pairs that you look out for in the London session, because those are the pairs that move most during the London session, right? Because the Chef Bank opens by the same time. The banks of Swiss, the Swiss banks open by 8, like it opens during the London session. That's why you see volatility in the USD Chef. The Chef banks, the Euro banks, and the GBP banks, they open by that London period. So you should be focused on pairs that have GBP attached, pairs like GBP AUD, GBP USD, Euro AUD, Euro USD, Euro Chef, Euro CAD, all those Euro pairs, right? But for me, you guys already know that I mostly focus on the Euro USD, GBP USD, and Euro GBP. Those are the 3 pairs I look at when it's London. I don't really, I look at USD Chef sometimes, but not all the time. So I can also trade USD Chef if I see opportunities. I also trade the USD Chef. Right, so that the 3 pairs you look at, these 3 currencies, you look at currencies that have these 3 pairs. These are the only pairs we look at during the London session. You shouldn't be looking at gold, you shouldn't be looking at silver, you shouldn't be looking at indices, NASDAQ. You shouldn't be looking at all those pairs until the New York session. So this is the best time to trade these 3 pairs. So only focus on GPUSD, and one is the time period. So the time period that we look at for Killzone, the Killzone is between what, 2 to 5 New York time, right? So it's between 2 to 5. That's the Killzone. But it also extends till the beginning of New York session, right? So 2 to 5 is the best time to see opportunities here. So new to 5 minutes, which is 7 to 10 Nigerian time, right? 7 to 10 Nigerian time. Right. We'll just give you guys the conversion, right? So you can look at these pairs by 2 to 5, which is 2 to 5 a.m. New York time, which is what, Nigerian 7 to 10 a.m. So that's why I usually see me trading pre-London session. So this is the concept of pre-London session. London opens an hour, the pre-London session opens an hour before the London session. Right? So you can look for opportunities once we hit the pre-London session. So you can look out for opportunities on GBP, the Euro, and the Czech. Right? These are the pairs we focus on during this time period. This is the secret to successful trading. People are always doing the wrong thing. They always look at the wrong pair at the wrong time and using the wrong setups. Right? So this is something you look at for only during this period. So look at for only the GBP, the Euro, and the Czech pairs during this London Killzone and session. So the London Killzone is between 7 to 10, but you can also trade it till up to 12 o'clock. So you can, sometimes it extends. So it extends till 12. So it extends to 12 Nigerian time. So remember, so it extends to 12. So it extends to 7 or to 12. So it extends to this time period as well. So these are the main periods. So, but this is the main period, right? So it's between 7 to 10 Nigerian time, which is what, 2 to 5, and also extends to 12, or it extends to 7 a.m. New York time. So it's an extension sometimes, but sometimes it's the opportunity to extend. So now, this is a period in which you look for setups. Note, these setups must not activate you during this time. It's not that you must enter a trade during this period. It's a time that setups obviously present themselves. So you should look for setups in this time period. So you can set your limits. If it's far from it, you can set your limits during this time period, because that is when the setup present themselves. So if you're looking for setups on London pairs, the best time to look for setups during the London session is during what? This period between 7 and 10. So anything after 10, 11 might not be that good. Right. So just simply set your limits at that time period. Just set your limits. If you're using limits, you set your limit. If you're using instant execution and price is close, you can enter them. So this is the best time because you see volatility, you see the market moving very quickly, and all of this fun stuff. Right. So you should be trading gold now, you should be trading indices now, you should be focusing on what the Euro, GBP, and spreads, right? So what I is using was the power of trade, which I talked about in the previous class. Markets running higher and doing all of this fun stuff, right? So let's look at GPAUD, a trade I caused yesterday, a very beautiful trade on GPAUD. Let's look at one example and then we'll wrap it up. I don't want this call to be long at all. This call will be very, very brief. So you guys can prepare for tomorrow's teaching. So this is GPAUD. GPAUD. All right. So now remember that it's a London pair, right? So what did I say on this pair yesterday? So I think I was bullish yesterday. As I took this trade, you can check my Telegram community, you will see that I took this trade, right? So yesterday I was bullish on this market, right? So why was I bullish? I could see the market was breaking highs. See the market break this high, so market break a second high. So I was kind of bullish, and I could see this unmitigated candle. I had this other block candle. This candle was unmitigated. This candle here, I had this other block here. Right, there's another block inside. If you look at the water, you will see very clear. There's another block inside that candle. Right, very, very clear. This was the last down move and all of this forms, right? So you can see that even if you refine it, that's why we actually hit all the other blocks. So even if you refine this lowest candle, we actually hit the other block again. So we did the first time, I think came the second time, right? Sweeping was liquidity. So we had this liquidity sweep here. So you can see that also liquidity sweep here. Market swept this low. So that was actually what I was looking at. And then go to the lower time frame, we saw a very good opportunity there. So on the 5 minutes time frame, I was looking for buy opportunities and I had it. So markets came to my area of interest, which was down there. You saw liquidity. What did I see here? I made me to buy. Very simple trade. That was yesterday. So yesterday. What was yesterday? Yesterday was Tuesday. Yesterday was Wednesday. So I'm looking for Wednesday price action, right? So this was yesterday. So the first things first, we mark up what the midnight candle, right? So where's the midnight candle here? This here, power of 3. So what happened? The market did run below. Remember that when we are bullish, we expect the market to run down first. The market actually ran down and gave us a confirmation. So that was our break of structure here. Please watch the previous call. I talked about this in details. I talked about power of this. So that was our break of structure above this previous high. So that our break of structure here. So that our break of structure here. All right, so and the market came back to the last down push. So I also see my limit here. It's very beautiful trade, very simple buy, very simple opportunity. So very, very simple trade. I took it yesterday. So you can check my Telegram community if you think I'm lying or you don't believe me. Just check my Telegram community. I actually posted it there before I entered. I actually bought this market and I was targeting this Asian high here. So this was an Asian high. So an Asian high. That was actually my target for this trade. I think the one is to 2 point something, right? So if you take your entry here, and stop loss is a bit below. No, I hope you don't let me stop loss, right? So I was targeting just that high. So this was the high I was targeting. That's Asian high. Yeah. So that was it. It was 1 to 3 points something. So very beautiful trade. Nice opportunity. Market actually hit it. So it took a lot of time. The market was very slow. And you can see this happened during what the London Killzone. So this was between 2 to 5. So between 2 to 5, let's mark at 2 to 5. So 2 to 5 was between here. This was 2 o'clock to 5. So you can see that this market activated me during what the Killzone. So this was an opportunity between 2 to 5. That was the New York Killzone. So the London Killzone market activated me there, and then it moved, and then so this is it. So you must look out for the opportunities during this period. So once it's just 2 to 5, you look out for London pairs and look for opportunities on the London pairs. Right. So those are very nice one from GBPAUD. It hit my TP, did me very well. Very nice trade, and that was it. So you can go to your chart and look for further examples. For further example, I think EURUSD gave something similar yesterday as well. EURUSD, for some reasons, it was bearish. I don't know why it was bearish. Let's look at the daily chart again. Okay, I think we were playing other imbalance, but for me, I was bullish on the higher time frame. So for me, the reason why I feel that this guy is dropping off was this imbalance. I had was news. So we had this imbalance here. So market was playing this. Although this is a bullish, this is not really market was rejecting all this imbalance, right? I don't know the reason of doing that. So I had this imbalance, market was rejecting on the euro-dollar. So for me, I'm still bullish though. I'm kind of temporarily bullish, unless this is a liquidation. So this could be a liquidation. Remember, I told you guys that not every break is a break of trend. So this could be a liquidation. So market actually ran this high and then it came out to this imbalance. We broke this last bullish candle, making what we call a sell program, right? A sell program is something I taught my paid students, so don't worry about it. If you would like to learn more about that, you can just join the paid group. I talk about buy and sell programs, right? So it's not something I'm going to discuss here. So let's go to global time frame. So what do we have here? Eurodollar was giving signs that it wanted to drop. So Wednesday, first things first, we mark out the midnight candle, right? So the midnight candle here, right? So around there was midnight candle. And the market run above, yes, market run above. Remember that the market should run above when it's bearish. Market run above here and broke below. So that was kind of change of structure here. So market closed below this low here, right? Market closed below this low. Right. So what happened next? Oh my god. the fire of this teaching is too much. If you understand this thing, man, you're going to kill this market. This teaching is very deep. Remember that this classes will be moved from our YouTube channel on the 30th of November. It will move to our private mentorship group. Right? So we use this time to watch it and go through it. Right? So market actually broke. What did they have? Market came back to what? To take out this inducement. So took out this inducement. Remember inducement? I told you about inducement. Watch that video on inducement. Right? It's also in this playlist. So we took out this inducement and then we hit in this imbalance here. Right? So market actually gave a very beautiful sell opportunity here. So if you sold it, it would have been a very nice drop, right? Very nice drop. So even if you didn't catch it, then when did this happen? This happened during the Killzone, right? So between 2 to 5 plus 2, 2 to 5. So that's why it happened between 2 to 5. So this setup actually happened between 2 to 5. So very beautiful opportunity. Remember that the setup occurs between 2 to 5. It must not activate during 2 to 5. And it must not hit TP. Note, remember what I said. It activates you during 2 to 5. It must not hit your TP during 2 to 5, and it must not activate your entry during 2 to 5. So you're just looking for setups there. Then you put your limit, and market can take longer than that, right? So the main thing is that you're looking for your trade opportunity. Are you putting your limits, or you enter with instant execution? You just in your entry in the trade by that period, and then do what? Wait. So market you can put your limits by then, and it does not activate it then. So you can extend out of the time window. But the main thing is that the opportunity must be present between 2 to 5, and you can see it was present between 2 to 5. The sell opportunity, right? So that was what I had on you. So I think I'll wrap up the call here. I want to see you guys in tomorrow. Tomorrow we're talking about the New York Killzone session, right? I'll talk about the best of trading in the New York. I hope to see you guys in tomorrow's teaching. Have a wonderful day. Cheers and God bless.